If you're in your 20s, just starting to invest and want your money to move like it's got a job, this video is for you. These two ETFs show up everywhere on TikTok and finance threads. But if you get this wrong, you could end up building wealth and getting rich a lot slower with way more risk and not even know it. In this video, I'm breaking down the real difference between VTI and VOO, from what's inside each fund to how they perform over time, what kind of risk they carry, and who they're actually for. By the end, you'll know exactly which one fits your goals and whether holding both is smart or just redundant. I've helped thousands of beginner investors go from confused to confident and becoming the CEO by turning their dollars into their best employees. So if that's something that interests you, just look into the description below. This is gonna be the exact breakdown of what I wish someone gave me when I started. No jargon, no fluff, just clear answers so that you can move your money like the rich CEO you are. Welcome freaking back, rich bitches. Or if you're new here, hi, my name is Taylor Price, and this is Priceless Tay, your favorite financial literacy platform to help you thrive, not just survive. And when you hit that subscribe button, you join the rebellion where excuses die, money thrives. So before we dive in, smash the like button if you're all about passive income and financial freedom to see more videos like this. Let's start with the basics because this is where most beginners get it twisted. VOO is the Vanguard S&P 500 ETF. It tracks the 500 biggest, baddest companies in the US. I want you to think Apple, Amazon, Google. It's basically the stock market's VIP list. Only the elite get in. VTI, on the other hand, is the Vanguard Total Stock Market ETF. This fund doesn't just invite the CEOs, it brings everybody and anybody, okay? It brings in the employees in the building. Over 4,000 companies, from billion-dollar giants to startups so small, they still might probably be using Gmail for the company emails at gmail.com. Here's the kicker. VTI actually includes all the companies inside VOO, and not many people buy that because they just go in blind by seeing a recommendation that they saw on TikTok. So if you own VTI, guess what? You already own every single stock in VOO plus thousands more. VOO you can think of as the C-suite. VTI you can think of like the full org chart. You're not missing the big names with VTI, you're just getting way extra exposure to the underdogs too. And if you're brand new to ETFs and investing, like you're still wrapping your head around what even are they, hit pause and go queue up my other video, 4 ETFs to build wealth in 2025. All right, that one breaks down exactly what ETFs are, how they work, which ones are recommended for beginners. That one is your ETF starter pack. This is your side-by-side deep dive. Watch both, you'll move smarter, faster, and with way more confidence. But if you're good to go, keep watching. We're about to get into the diversification piece, and it's a game changer. Let's talk about diversification because this is where VTI starts flexing a little harder than VOO. VOO holds 500 large cap stocks. That's solid, but it's like only betting on the starters in a game. You're counting on the MVPs to carry the team. VTI holds, like I said, 4,000 stocks. That includes the starters and the bench warmers, even if they're rookies. You got large cap, mid cap, and micro cap, small cap stocks in the mix. Translation here, more players on the field, more shots on goal. But here's what most people get wrong. More diversification doesn't always mean better returns. It means more balance. With VTI, you're spreading your risk. You're less reliant on just the Apples and the Amazons of the world. Now, VTI isn't the only ETF worth your attention. In fact, I just dropped a video covering the 4 ETFs that could seriously move the needle for your portfolio in 2025. So again, check that out if you want. But back on diversification, if you want exposure to every corner of the United States market, from the biggest names to the next big thing, VTI is your move. If you'd rather keep it tight and ride with the giants, VOO will have your back. All right, let's talk about results here, because at the end of the day, what's the ROI, the return on your investment? Over the past decade, VOO has slightly outperformed VTI, about 12.7% annualized versus 12.1%. Why? It's super simple. Large cap stocks, especially tech giants, have dominated the market. And since VOO is only large cap, it got all the upside. But here's the twist. When small and mid-cap companies run, VTI can take the lead. Think economic recoveries or early bull markets. The underdogs usually sprint harder coming off the bench. So if you're judging purely on the last 10 years, VOO wins by a hair. But past performance isn't a guarantee. But depending on market cycles, VTI could steal the spotlight. The difference is real, but it's not massive. Pick based on strategy, not just who had the better chart last year. And quick check-in, which one are you holding right now if you're watching this video? VOO or VTI? Because I'm watching the comments, drop it in all week, let's see it. Now, let's talk about what keeps beginner investors up at night. It's volatility. It's the red and green days. VTI includes small and micro cap stocks, which means it's got a little bit more mood swing energy, okay? These companies are less stable, they're more reactive to news, and tend to move harder in both directions. VOO, by contrast, is made up of large cap companies that are already established. Think cash flow, dividends, stability. They might not double overnight, but they also don't tank the moment someone tweets recession. In numbers, VTI's max drawdown hit negative 55.45% compared to negative 33.99% for VOO. That's a big difference when the market's tanking and your phone is lighting up with red graphs. So ask yourself, how do you react when the portfolio drops 20%? If you panic sell or stop investing, you might want to consider the smoother ride of VOO. Let's talk about passive income, the money that's hit your bank account without lifting a finger. Both VOO and VTI pay dividends, but there's a slight nuance. VOO generally pays a slightly higher and more stable yield. That's because, again, it's made up of mature, cash-generating giants like Apple, Microsoft, Johnson & Johnson, companies that know how to cut the check. VTI, on the other hand, includes thousands of smaller companies that are still in growth mode. Many of them reinvest their small profits instead of paying them out, or don't even have profits yet. That means VTI's dividend yield can be a bit lower and more inconsistent. So if you're trying to build that money while you sleep lifestyle and want smoother, more predictable payouts, VOO might feel a little bit more luxe to you. But I have to say, both funds do the job. The dividends aren't dramatically different, just enough to notice if you're living on them. Let's zoom out and look at the sectors because not all industries are created equal, and your ETF might be betting heavier on more than one than you think. So VOO leans into the mega caps, tech, financials, and communication services. It's packed with companies like Meta, Alphabet, otherwise known as Google, JP Morgan Chase. These sectors make up a bigger chunk of the S&P 500. So VOO's exposure is more naturally concentrated. VTI, on the flip side, brings in more weight from sectors like industrials and consumer discretionary. That's because smaller and mid-cap companies live there. Think regional banks, niche manufacturers, new age retail, and the result here, VTI has a slightly broader sector spread. It's less reliant on big tech and more tapped into the heartbeat of the full United States economy. So if you want that betting on America whole energy, every sector, every size, VTI is going to be the badass employee for you. If you trust the mega caps to lead the way, VOO is going to be your corner office ETF. Let's talk about when VTI might outperform VOO, because VOO doesn't always win. VTI shines when small and mid-cap companies are cooking. This usually happens in economic rebounds or early bull markets when investors are willing to take more risks on up-and-coming players. If a hot new sector explodes like clean energy, AI startups, or next-gen tech, VTI is more likely to catch that wave because it holds the innovators before they even make the S&P 500 cut. Another key moment here, when market leadership rotates, VOO has been riding high off of mega cap tech dominance. But if the market shifts towards mid cap value and smaller disruptors, VTI could pull ahead. It's the underdog play, and in the right market, underdogs win big. So let's settle it. Do you really need both? Here's the truth. You can own both VOO and VTI, but you might be doubling up without even realizing it. About 82% of VTI's holdings by weight are already in VOO. That means if you buy both, you're mostly buying the same big name stocks twice and sprinkling in 3,000 extras. Think of it like this. VTI is the deluxe combo meal. VOO is the burger. If you already ordered the combo, don't panic about the burger. You're not missing anything. Holding both isn't wrong, but it's probably overkill unless you're splitting accounts. Think Roth IRA versus individual brokerage account, rebalancing risk, or just want the psychological I own everything feeling. The bottom line here, if you've already got one, don't overthink it. Focus less on being perfect and more on just being consistent. You don't need 15 ETFs. You don't even need a finance degree. You need clarity, consistency, and a strategy that actually fits your life. If you're still wondering, but where do I start? That's a problem. Indecision delays wealth. We don't want that here at all, and that's why I built the Rich Blueprint. It's a flowchart that shows you exactly where you are, when to invest, and how to move money like it already works for you. Links in the description, download it, follow the steps, and act like the CEO rich you are, okay? Because every dollar you delegate, it's one step closer to your exit plan. Now, tell me in the comments, are you team VOO or team VTI, or are you playing a little bit of both sides? I wanna see your moves in the comments, and I'll see you next week. Peace.